Canadian real estate becomes the most unaffordable it's been in 40 years, and the Bank of Canada might stop raising interest rates in September. This is August 26th, and your weekly recap for what's in the news in Canadian real estate. Let's get into it. First topic here, Canadian National Bank says that Canadian real estate is the most unaffordable it's been in 41 years. In fact, they're saying that to buy the average house in Canada would take 64% of the average household income. That's a stat and a number that's going to get in the headlines and have people freaking out. And I know how they came about this calculation. They just took average house price and compared it against average income. But that is a really misleading number. When you're qualifying for a mortgage, you will not qualify for anything with your mortgage payment and your property taxes combined of more than 39% of your monthly pre-tax income. There are exceptions to this, but pretty much anything under 40% or anything over 40%, you're not going to qualify for that mortgage. So to have a headline saying that the average house costs 64% of the person's household income, I can see why they put it in there and how they came about it, but that's not really that accurate. But there is a ton of really good information in this article, so I suggest that you check that out. I'll put the link to that in the description. I do agree with the sentiment of this report, though, and that is Canadian real estate is more unaffordable, and that is of course combining the exponential almost growth of house prices we've seen in the last 2 years and then now skyrocketing interest rates. That starts making it a whole lot harder to qualify for a mortgage, and for those on variable mortgages, their mortgage rates have gone up quite a bit, making their monthly payments a lot higher. So I understand where they're coming from on their numbers. I agree with the sentiment. I just think some of the headlines that are being used to talk about this article, those aren't the most accurate. Next up, Desjardins has a new Canadian housing market forecast where they're expecting real estate prices in Canada to drop between 20 and 25% by the end of 2023. That is, of course, peak to trough pricing. They are saying, though, that they're expecting home prices, even after this decline, to still be higher than they were pre-pandemic. BC and Ontario, those will be hit, not the hardest actually, but they will see price drops of 22 and 27% respectively. New Brunswick, according to Desjardins, is where they're expecting to see the biggest price decreases of 29%. The two provinces that they're expecting to see the lowest decline, Saskatchewan and Alberta, at 4 and 7% respectively. I've got an article coming up here that's going to explain why that is. Of course, the predictions for the Canadian real estate market seeing a massive correction or even a crash are coming out fast and furious. Everybody loves clicking and watching those videos talking about how bad the real estate market is going to get. Remember, this is just an educated guess. Nobody has the crystal ball as to what is going to happen. I'm starting to lean towards we may look back on the summer and fall of 2022 as a rare opportunity where buyers could get some pretty good deals on houses. Time will tell on that. But I've said it time and time again, the right time to buy a house is when it makes sense for your own personal situation. And of course, this next article kind of just proves the point that everybody's just guessing. TD has a statement out saying that they expect the Canadian housing market to stabilize by the end of 2022. So this year, not at the end of next year. They're saying that they're expecting house prices will decline 19% again from peak to trough, and with 12% of that already happening according to their numbers. They're also kind of thinking that we're going to see some stability in rates, meaning that they don't think the Bank of Canada is going to increase mortgage rates much higher, which is why they're seeing some stability in the market. Article number 4 here is the Conference Board of Canada expects that the prairie provinces will lead economic growth in Canada for the next couple of years. So if you're wondering why I have been so positive on my outlook for not only the Saskatchewan economy, but also Saskatchewan real estate prices, this is exactly why. They're expecting Saskatchewan to lead the country and by a wide margin in economic growth, 7.6%. Alberta will be second at 4.9%. This is also why those two provinces will likely see the smallest correction in house prices with this underlying economic strength. I've been saying it for a while now. What we're kind of feeling in the sentiment here in Saskatchewan, at least, feels an awful lot like it did before the big boom in both the economy and the real estate market we had in 2006 and 2007. Not saying that's going to repeat itself, but it sure does feel like things are trending in a very positive direction in Saskatchewan. That's why I feel a lot more positive about the Saskatchewan real estate market. And the last little piece of real estate news here is from a CIBC strategist. where they are expecting that the Bank of Canada will stop raising rates after the September meeting. They are expecting rates to get increased at that meeting, but that will be the last one. They'll end their rate hike cycle. This to me would be really surprising. This would be big news. I don't think this is going to happen. I'd be happy to be wrong though on this one. Now I'm wondering if maybe a CIBC is thinking that the Bank of Canada is looking at the inflation numbers potentially starting to turn the corner and trend back down, or that some of the problems that we have that's causing inflation, like high energy prices, well, those can't really be cured by higher rates. So not exactly sure where CIBC is getting their information from, but I think this is really interesting. I've always felt that the Bank of Canada is going to continue to raise rates until they break something. And then once they break something, you'll see rates come back down. It's also at that time that I think the buyers that have been sitting on the sidelines right now, kind of waiting this thing out, waiting to see what happens, that's when they'll start coming back to the market, when they see some stability and see rate hikes potentially stopping, things flattening off. That's when I expect they'll enter the market. And that is also why I'm thinking when we look back on 2022, we may say, hey, that summer and fall was a great time for buyers to get in with less competition. But again, only time will tell. Okay, that's a wrap on the news for this week. If you loved it, let me know in the comments below. And of course, give this video a like and subscribe if you haven't already. As always, guys, thanks very much for watching.